Morning. Despite people tightening their belts and keeping their hard-earned cash at hand, one company is spending money. Australian venture capitalist firm Starfish Ventures among investors who've invested $60 million in industrial solar power player called Ausra of the United States. It's the third green technology investment for Starfish, which in its short history, just 7 years in the business, has accumulated nearly $400 million in assets under management and has invested in over 30 companies. We're joined from Melbourne this morning by the co-founder and principal, Dr. Michael Panaccio. Michael, good morning to you. Why invest at a time like this when everybody is so scared about what comes next?
Well, venture capitalists basically build companies over a 3 to 5 year period. So we're not looking to exit into these markets, and these are great markets to go out and buy into novel technology companies and slowly build the market without much competition.
Specifically on this investment, why invest in alternative energy when the price of oil has careened and crashed the way it has? Certainly the viability of alternative sources of power are not as viable as they were if oil was going to be $200 a barrel like we were talking about just a few months ago.
Sure. So one of the key attributes of Ausra is that it's a solar technology that could be used on existing power plants. So most power globally comes from coal, and as you know, there's quite a large issues about the carbon footprint of such power stations. You know, the solar power technology that Ausra has basically developed allows you to preheat the water and therefore burn less coal to produce power out of existing infrastructure.
How is the VC industry these days, Michael? By most accounts, investments are being pulled back and the credit mess has not left the VC space untouched.
Well, I think VCs have basically gone through a crash recently in 2001. So they basically are attuned to the change in economic climate and are pulling back on the burn rate in their underlying investments. At the same time, if you're trying to raise a VC fund, it's actually quite a difficult period because the LPs, the investors into VC, basically invest into equity markets and other type of things, but the amount they put into VC is a percentage of the total pool. So as the equity markets go down, their allocations to VC go down as well. But having said that, if you've already raised, sorry.
Go ahead. Sorry, I didn't mean to interrupt. Go ahead. If you've already raised what?
So if you already raised a fund, you don't need to go back and raise another fund for 3 to 5 years. So you could be pretty confident of investing over the next period.
Now, you mentioned for the 3 to 5 year time horizon is quite typical. It's not unusual for a venture capital company, but the fact that liquidation, the ability to liquidate, is so tested right now because of the unwillingness of a lot of people to deploy cash, does that change the kind of time thinking? I mean, does that 3 to 5 have to go to 5 to 7 or 7 to 10 years? Do you foresee that kind of environmental change to the venture capital space?
Well, there's two aspects to the question. Companies that we hold today that we invested 3 years ago, the view is, well, we can't basically go out and sell those companies in the existing market because the buyers aren't there. But it's an opportunity to us to grow those companies further and therefore sell them at a higher price in the future. Investments that we make today, clearly we believe that the markets will be different within 3 to 5 years' time when we go to sell those companies.
One last issue I want to explore with you. You are clear, obviously, telling by your accent and the fact that you're in Victoria. You're an Aussie and the company is Aussie founded. The Aussie dollar has been the cause of a lot of angst in the past quarter or so with its crash from what we thought could be close to parity with the U.S. currency to where it is right now. What kind of any change in dynamics as a result of foreign currency bouncing around, Michael?
Yeah, sure. It's a very big issue for us because around about 50% of our companies have got operations in the US, and therefore 50% of salaries and so forth are all denominated in US dollars. Most of our companies have raised Aussie dollars, so it becomes more expensive to basically maintain those operations. But at the same time, when we sell those companies, we're going to be selling them for US dollars and therefore have a windfall gain at the other end. So, there's a bit of good and bad in the story.
Michael, it's great talking to you. Best of luck with your latest venture in Ausra. Coming up.